Hey everyone, welcome back to another video and to the monthly series where we will go over, or where I am updating you on the Harvest high income shares. We've got a lot to talk about because Harvest already recently announced the new distribution rates, or the initial distribution rates, and therefore the yields on the Canadian one. So the first one, HHIC, the Canadian all-in-one, which will hold the first 10 Canadian listed, not Canadian listed, but the Canadian stock ones. You guys know what I mean. Distributions 16 cents a month. And by the way, they all start at $12, so it's very, very easy for us to calculate the yield. It's basically 16%. So my prediction was 15%, a little bit more, a little bit less. So I would say I was pretty much on the money for the HHIC, which is the Canadian all-in-one, right? The Canadian version of HHIS, if you will. So let's go through them one by one here. Let's look at the 10 stocks and let's look at the first distribution rate. So Shopify, of course, I knew this was going to be the highest one because it has the highest volatility out of the 10 stocks by far. So you're looking at an initial yield of about 25%. That's, of course, based on a $12 price. And obviously, if the price goes down, the yield is higher. If the price goes up, the yield is lower. But remember, everyone, these monthly distributions can fluctuate. As we'll see with the US ones, we have some fluctuation, we have some action this month. So Shopify 25% yield, Royal Bank of Canada, pretty boring stock, 11% yield, TD 13%, which I guess TD is a little bit more of a volatile bank than RBC. TELUS 12% yield. These are boring stocks, right? Most Canadian stocks are boring, to be honest. They don't have much volatility. Surprised to see Bell Canada at 14%. I didn't think it had that much volatility more than TELUS, but I guess it has had some bad luck and volatility lately. Cameco's second highest one. This is a uranium producer, 22% yield. Interesting, just below Shopify. CNQ, Enbridge, Suncor. So these are oil and gas pipelines. So they're CNQ 15% yield, Suncor 14. That makes sense to me. Should be these are a little bit more volatile than the banks and the telecom. Then you have Enbridge, a pretty boring pipeline company, at 13, and then you have Agnico Eagle, which is a gold producer. Gold producer is always a little bit more volatile, at 16. So these distribution rates are the initial ones. So you have the yields right there set in stone in terms of the first distributions, and the all-in-one is pretty much the average, 16. Remember, everyone, these can fluctuate, but I expect HHIC, the all-in-one, to be the most stable, right? Because it's a collection of all of them. So, and obviously the most popular by far, right? It's already at 5 million. I mean, this is just a day or two that it's out, already 5 million, almost 5 million in assets. So obviously these high income shares are very, very popular. Now, moving on to the US ones. We do have some action. The first one I always look at because I own so much of it, because I love it so much, is the all-in-one HHIS. So HHIS, no changes, still 25 cents a month. There were a couple of reductions, which are absolutely no surprise to me. So Eli Lilly, Lilly is going from 18 cents to 16.5 cents, and the non-leveraged version is going from 16 cents to 15 cents. This was definitely not a shock to me. I mean, the stock has been under pressure lately in the last month and 6 months, as we could see. Remember, everyone, I repeat, remember, everyone, the distributions can vary. They are based on a volatility and also the NAV, right? We're starting to see the trend now with the ones that raise, with the ones that reduce. Typically, what you'll see for the ones that are reduced a little bit, and we're going from 18 cents to 16.5 cents. It's not a super dramatic. You're not going to see dramatic increases or decreases. But if the stock hasn't done well lately, the NAV is going down, there's going to be a chance of a decrease, right? So remember, these are not dividends. These are call option premiums, which are impacted by the volatility of a stock and the net asset value, or the share price. If the share price is going down, just like Tesla went down during that period, you could expect, or you shouldn't be surprised if there is a little reduction. This is actually not a bad thing. This is a prudent thing. It's a responsible thing to do because remember, Harvest is a very conservative, reliable, consistent manager that never wants to give out more income that they take in. That would be bad rock, right? And I trust Harvest to never, ever, ever do that. And by the way, if you've missed it, please watch the Q&A I did with Michael Kovacs, which was released very, very recently. I did 2 parts. The first part was about HHIS and the high income shares. We talked about MSTE, increases, reductions. If you own any of these high income shares, if you own HHIS, if you're wondering or worried about why do they fluctuate and why do the distributions fluctuate, please watch that Q&A. Get your information straight from the source. All right, moving on. So Lily, Lily's been having a bad time, so it's only normal. They reduced it a little bit. MSTE and MSTY and MSTE are the next ones that have reduced. I've been calling for an MSTE reduction for the last month or two. I was actually surprised they kept it at 60 cents. So MSTE, which is the most popular one, which I own almost 200,000 of, which many of you watching own, did reduce from 60 cents to 55 cents. Completely normal and expected. Let's look at what, by the way, I'm filming this on the 22nd of August and it's a great day, green across the board. But if you look at the last month for MSTR, for strategy, it's not been having a great time, right? I always look at this when it comes to strategy. I look at this every day so I could see the MNAV, which is the proportion of its Bitcoin holdings versus its market cap of MSTR. And this is what I've been trying to tell you guys. I mean, the volatility on strategy has not been high. It's a lot lower than it used to be months ago. You see here the historical volatility, 91. I wish we're not even close to that anymore. We're in the 57, 59, 60% range, which is very similar to Tesla, guys. So if the volatility is not going up and the net asset value, the stock price is going down, they have to reduce it. They're going to make less call premiums. It's only normal. So MST completely expected 60 cents to 55 cents. And MSTY, if you own the non-leveraged one, which I don't know why you would ever own the non-leveraged one instead of the leveraged one, is went from 33 cents to 31 cents. So those are the 2 reductions for this month. Not surprised at all. Lily and strategy. And Broadcom and AMD have increased. Right, so Broadcom 22 cents is jumping to 27 cents. So let's look at what it's done in the last month. It's done really, really well in the last month. It's done extremely well in the last 6 months. So you see positive momentum, positive upswing. Volatility is probably remaining the same or going up. I'm not going to check, but you could see the trend, right? If the stock does really, really, really well, it's going up and up and up, there's more NAV, you could expect an increase. Right, the same story for AMD. So Broadcom is going from 22 cents to 27 cents, which is a pretty big jump. Right here it is. The last one was 22 cents and the latest one was declared at 27 cents. In the press release, by the way, that's where I'm getting my information. But I just wrote it down so I don't have to switch back and forth in the screens. So hopefully I didn't make a mistake. Let me just check. 22 to 27 is a big jump. Let me just double check that. So yeah, here it is. I just wanted to double check. So Broadcom is going to 27 cents. So 22 to 27 cents and AMD 24 cents to 28. So AMD also another jump, everyone, 24 cents to 28. Let's look at what AMD stock has done in the last month, the last 6 months. Obviously, you could see the trend, right? It's done really well in the last month, really well in the last 6 months as well. And then you have Apple. Apple also increased a little bit. So Apple was declared at 14. So Apple is going to go from 12 cents to 14 cents. So a little bump up there. And I think Apple's been doing pretty good lately as well in the last month as well. So there you have it in terms of updates, everyone. So we got a few reductions, which are hugely expected, a few increases, which honestly were also expected. AMD and Broadcom have been ripping upwards. Everything else has remained the same. So that is your monthly update for the high income shares. We're going to do this every single month to keep you updated on these distributions, which ones are up, which ones are down. I'm going to be covering both the Canadian and the US ones, HHIC, HHIS, of course. We're going to do this every single month. And again, if you're worried about MSTE dropping sharply lately or the distribution decrease, remember it's completely normal, and please think long term, guys. We are investors, we're not short term. swing traders or anything like that, I made a video not even a week ago, talking about MSTE and why, because I've been getting lots of concerns and questions. Why did it drop so suddenly when Bitcoin's not going down as much, or it's not going down and MSTR is going down? Make sure to watch that video if you're worried. But listen, guys, I could talk to you. I could talk to you if I'm blue in the face, but actions speak louder than words. So what I will tell you now, what I could tell you for sure, is that next month when the dividends come in, so mid-September, I will be investing a minimum at least $10,000 more in MSTE, and probably maybe even $20,000 in MSTE, right? So actions speak louder than words. If you're going to ask me, am I concerned, am I worried? I think that just proves the complete opposite. In fact, I've been excited seeing MSTR going down and down, and MSTE, in fact, going down and down, because I realized I could buy more cheaper shares. Yes, it sucks you get a little bit less income, but another thing to remember, everyone, is the distribution rates, whether it's 55 cents or 60 cents or 10 cents or 5 cents or 0 cents. That's just how much Harvest is deciding to give out to you from the NAV, right? So the distribution amounts actually have no impact on total return. They just have an impact on your income. But again, Harvest, I trust, give out a responsible amount, and I kind of predicted MST would reduce a little bit. But hey, we'll see what happens in the next couple of months. Maybe Bitcoin starts taking off, MSTR starts taking off, right? Like we see with AMD and Broadcom, we see the trend. As the stock has really, really positive momentum, it's going up and up and up, they could raise it. If it goes down and down and down, they could reduce it. It's completely 100% normal. So give me a thumbs up. I'd really appreciate it on this video, guys, and see you next time.